Hey guys, what's up? So today got a very special video coming out. And what we're gonna do, what we're gonna discuss in this video, right, is options. So I'm not gonna go into the entire definition, the whole nuance and all that stuff. I'm just gonna show you a play that I'm into. I know that it can be a benefit to you guys to see how that comes about and what I do on the overarching method that I do. Not really uh, going depending on the different types of options, none of that. That's going to be something that I will break down in my course that I have coming out. This video is just to let you know the option play that I'm in as of right now, kind of, and breaking it down to you guys slowly but surely to see the different side of the market and what the market can do. I always advocate for people to start a long-term portfolio first before they go into options trading, because options trading is, again, risky. Investing is risky. And if you're solely options trading, you can and you will lose your money. And it's better for you to have a long-term portfolio and be at ease at times when your options aren't doing it as well, right? So please start a long-term portfolio first and get into options second. I have videos discussing these topics, and I also have a course on long-term portfolio and long-term investing, right? So before we get any further, I do want to, basically shout myself out. So I just dropped my hoodies, right? So my gear, TommyWorks.net. If you guys want to support me, please feel free. A bunch of colors that we have, a bunch of colors I have on my website, TommyWorks.net. And you guys can get totally fresh in the hoodie. So it says investing is for winners. And I just want you guys to know that if you're investing, whether that be investing into yourself, into the stock market, or just anything that can be a benefit to you really and help you grow as a person, that that you're a winner. You're reading books, you're taking classes at school, you're designing, you're doing this, you're working with your hands, you're in automotive industry, you're in the tech industry, you're in the service industry. If whatever you're doing, if you're investing into yourself to make yourself a better person, you're a winner in my book. Okay, so we're gonna get straight into the options, and I'm gonna share my screen, and then we can get straight into it. All right. Okay, so here. So we're in the options chain for WWE, but I'm gonna go back. So, well, my screen, it's frozen because this laptop likes to move slower than molasses. So we're in WWE, and this is the stock price right now, $44.97. And when you're doing options basically is a contract, right? Where you have the opportunity, right? If it, at the expiration date, if you want to buy this, you want to buy this contract, right? If you want this contract to yourself. So within an option, there's 100 shares inside of an option, 100 stock shares, right? So it comes with 100 stock shares of the stock you're purchasing in the option. So one contract is 100 shares, right? So at the end of the day, if you let the contract expire, you're pretty much purchasing the shares at the strike price, right? Most people do not let it expire because you can make money without having it expire. And it's actually better for most people to not let the contract expire and just do the option play yourself by selling the option, like getting out of the option and collecting the money that you made. So we're gonna go straight into it, and we're gonna look at let's see here. We're looking at WWE. So there's a lot of things I do. So hit trade WWE options right here. And you'll see buy, sell, call, and put it at the top. Again, I'm not going into the entire nuance of this. I'm just going to show you what I did for WWE as of right now. So you can buy a call. So buying a call is saying that this right here is a strike price. This right here is break even. This is percent change throughout the day and all that, and the actual, I think, monetary change right here, and the percentage to break even. So what we're looking at right now is the options chain pretty much for WWE. So when you do buy a call, you're saying basically that you have a bullish mentality of this stock. So bullish means that the stock price is going to go up, right? In your view, within a particular time. You have an expiration date. So what price, this stock price, what do you think, at what time do you think this stock this stock is going to get to the strike price, right? It's kind of like a like a brain twister, but let me explain that to you again. I probably explained it wrong. So you have an expiration date. So you're saying this stock, right, which is at $44.97, is going to hit this strike price at this particular time, correct? That made more sense. So this is what we're doing here, right? So you want to choose. So you want to choose. Make sure you choose a good strike price at where you think that stock can get to, and that comes through your fundamental analysis and also a little bit of technical analysis of the stock. But I don't really want to go into the straight fundamentals right now. That'll be a long video. I just want to make this, probably like 11 minutes tops. So a good way to see a strike price that you want that would be like kind of attainable has been done through analyst research is by going and seeing what the analysts would think the stock should be at within a 12-month period or within a year, right? So that's a good way to find a strike price of a stock that you think you can attain. So before we get into that, let's say you want to basically say you want this. Well, all of these are a lot cheaper because they're believing it's no way you can get to that. So let's do April 2021, right? So you're saying, well, WE is $44.97. I believe through my analysis, through looking at stuff and reading the stuff about WWE, maybe going to the website and seeing what they have coming up in the future, looking at their balance sheet, looking at the portfolio, looking at indicators, all these type of things, right? You believe, WWE can get to 55 by April 16, 2021, or maybe not that, but can get close to it. It doesn't matter if the stock gets to that strike price before you start making money. You can start making money before the stock gets to that strike price. It just has to be going in that direction. So if WWE is continuously going up, it's not at 55, but let's say it's at 40, 48, trust me, you're going to be making money off of that. But again, it also depends on the expiration date. So if the expiration is too close, right, to you, and they're like, okay, the strike price is actually a little too high, and it's only at 48, and you only have 2 days to expire, even though it's moving up, you only have a week to expire, you may start losing money because it's like, okay, they're looking at it like, okay, there's no way it can get here, right? So you may start losing money. So it's always about also the expiration date that you choose as well. That's also one of the biggest things, because the closer expiration, the more volatile it is and the more money you can actually lose at a quicker pace than having something further out, right? I'm going to tell you my little secrets as we go along, okay? So let's say you're doing 55 and you're like, okay, I think it gets to 55 by April 16th, 2021. And how much, January, March, April? That's like 5 months. It's a little close, but it's not bad. That's a little close to. I wouldn't do this. Well, I wouldn't do this. Yeah, I wouldn't do it. So as well as basically you want to look at the change. So buying a option at a good percentage is also important. So if you buy an option that's at increased by 13%, look, this is increased by 13%. That means there are people who bought it 13% lower. They have already made profits, right? Because it's increased by 13%. They have already made profits. So you're buying it at 13% higher because this WWE is starting to trade higher. It's like the price is increasing, so the option cost is also increasing. So you want to make sure you're buying it sometimes like you would try to at a good price. So like this one right here is down because they believe that there's no way it can hit $60 by April. So it's down. If you think so, you can purchase it. This wouldn't be one that's too bad to purchase, but again, it depends on whether or not it can actually get to that strike price by that time, which again is a possibility, but it is risky. You see how risky this is? So let's get it. So we're looking at the strike price of 55, and we're saying, so it says $1.28, but it's not $1.28. It's actually $128 because it's multiplied by 100, I believe. So it's not $1.28. It's $128. Yeah, because you're buying it at that price per one share. So it's going to be, everything is multiplied by 100, right? So this up here, 0.38 is 0.38 cents, right? But it's multiplied by 100, so it's $38. Everything is multiples of 100. Okay, so let's get out of here. And so let's see. So let's actually fake buy. So I want that. So as you can see, the total cost is 130. I don't know why. I think it's like some kind of trading deficit. I don't know, but it's 130, as you can see, right? So if I do continue, and I do, so 100 shares each. So there's 100 shares in one contract. You can buy multiple contracts. You can do two, right? And that'll cost you 260. That's how, you can buy 5 contracts at 650, numerous contracts, right? And it's 100 shares per in each contract. So that means that your $1.30 is actually $100.30. So let's do one again, 130. So that's what you do. So you're saying by April 16th, this WWE is gonna hit $55, right? Hopefully. And as when WWE's price is approaching and going up there, what you pay for it will start to increase, right? But if WWE starts going down, then you're right here, what you paid will start to go down as well, right? And the closer the expiration date, the more volatile. That means the more your price could change, the more you're making could change. It changes a lot faster and more drastic. So just know that, right? So I think that makes sense to you guys. If it's a little confusing, please go back and rewatch it. I'm not gonna look at put because I'm not doing that. I did a call, so we're gonna do call. So what I want you guys to know is, let's go to Yahoo Finance. This is where Yahoo Finance comes to play, right? So I'm not gonna go through the entire analysis of WWE, but we can take a look at maybe a couple of things. So we can take a look at a couple of things and see their P ratio. So you're buying it about 20 times its EPS. So that's not bad. It's not even as high as I've seen it. So that's not even that bad. I'm sorry, my screen is frozen. So it's taking me forever. Give it a minute, guys. Give it a minute. All right. So the analyst estimated target time for, whatever inference the Yahoo Finance have gathered through analysts is about $50 within a 1-year target price to get to $50, right? So, they're saying that within the year they expect it to be at $50. So it's about to be at that price, right? And let's say you would have saw this target a couple months ago, like you would have saw this target at the beginning of the year, right? I know this is hypothetical, or around, let's say you saw it like maybe February, right? You looked at the target and you saw where it was. Let's say they had it at 49. If you would have put your option, right, at $50, right, it would have been cheaper back then too. Well, maybe it wouldn't have been cheaper, but let's say January you did the options play for like this, like end of this year, like October or you did it for now, like December. So it probably would have been more, but you'll be making money because think about it. So they say it's supposed to be at $49, right? So that's what it's good. It's good to use a target because it helps you know what price the analysts who have gathered information about the stock think that it can get to within a year, right? So this goes to show you that this is a good indicator of where you want to be at. So right now it's at 44. This is our last month of the year. Can it get to 49? By April 16th, will it be able to get to 55? Maybe not. Maybe 50 would be a better thing for you to do, right? For that time period, or if you want to do it closer. But again, this has already tremendously increased. So I don't think that you can make you will make money, but again, this has already tremendously increased because you're looking at the percent change. So this is already trading high, right? So hopefully if you buy it, it can go to like, hopefully like 55, right? And then you'll make even more, of course. But if it only gets to like 50, it's already kind of priced in. So you probably make like, who knows, not that much more. It's already priced in. I'm telling you guys. So what I like to do, going on a tangent, right? So what I like to do is I like to have mines as far out as possible. So I really would do, I did January 21, 2020. Yep, I did. In 2022, I'm sorry, January 21st, 2022, I did. And why I did that is because it gives it more time. One, when you're doing options, you want to make sure, I'm sorry, when you're doing options, you want to make sure that you're giving it a lot of time, the expiration date, a lot of time, the stock, a lot of time to get there. Because anything, as you all have witnessed within this year, anything can happen within the months, up and down fluctuations. If you're doing it within a 6-month period, you only, honestly, you should be trying to get out of that option play within 3 months. You don't want to hold it for the entirety of it, ever. That's where people lose their money. So if I'm doing January 21st, 2022, I'm not holding it to January. No, I'm trying to get out of that 2021 by like July. By like July, I'm trying to get out of that, right? Gives me about 7-8 months to get out of it, right? I'm trying to see where it's at by July, because by that time, maybe even 6 months, maybe even like January, March, April, May, like May, because by that time, it's like, okay, they're looking at the stock price, right? The market makers, and thinking, can this stock price actually get to that strike price that you chose by that time? Can it really? And the price of it starts going down. So, you know, so so I did 65, right? That's probably far fetched, but it's had a 17% increase since I did it. And mind you, I bought it too high. I bought it at $200, and it's at 330 now. I bought it too high because I saw it go down to like 150 like a couple days ago. I'm like, I could have bought it at like 150, you know? So you want to make sure you're looking at all this stuff, guys. And when the market is having a green day, the options are also increasing. Like when the stock price is increasing, the option cost is increasing. So be wary of that. Don't try to rush and buy an option because at a high price. Like it's always buy low and sell high. Like it's always that fundamental thing, guys. You got to think like that. So, see, you can see I bought it because I have one contract, and right now it's worth 330. By next year, January, March, April, by like next year, April, May-ish, I'll be looking to assess it. If I can give it one more month, I'll give it one more month, right? And see. They're saying within the year it's supposed to hit 50. I think it can hit another $15 by within 2021. So I think it could, and that's I believe that it could. So that's what I did the option for, as well as that's pretty much, that's not it, but that's what it is. And I'm trying to think about something else that I did to see. Well, okay, here it is. So sorry guys, my brain just froze for a second. So you want to make sure the percentage that you want the actual price to go to. So it will show you your percentage, right? So it will like show you, see, it will show you like, let me see if I can go into it. So it will show you guys like, okay, before that, actually, I'm not done talking here. I'm not done with this. So you see the break-even price? That is the price it needs to get to basically give you your money what you spent. So if I put 200 into this, right, to get this option, of course the price can go up. As you can see, it's at 330 now, so that's $130, right? That's ridiculous. Generally speaking, the break-even price should be around $68, right? Generally speaking, it should be around 68. So this thing is saying basically that the break, like when it gets to $68, technically speaking, the 200 you put in, you should already make, you should have your 200 back, right? So that's the price it needs to get to for me to get my 200 back, what I put in, right? So then I'll be taking home 400, right? So that's I'll be taking. So if I sell it, my entirety would be 400, but I used 200 to get the option, and I made 200. So that's a break-even price, and it goes by percentage. So when you see this, the percentage sign next to your option saying you're at 98% increase or 100%, 100% increase mean whatever money you put in, you've already made. So you got to know when you're gonna jump out. For WWE, I am jumping out at the 100% increase. When I get my $200 back, I'm out. I'm not looking to get a 200% return, meaning that I get what I put in times two. So I'll be getting 600 because I would have made 400. I'm not looking to get that in, like for WWE. So knowing where you want to jump out is also a major thing in percentage wise. So I'm only doing 100%. I only want what I put in back, right? So even if it goes up higher, that's fine. I'm good. You know? Even if it goes up higher, I'm fine. You know what I'm saying? So as you guys can see right here, this is my option, right? Again, I told you I put in $200 to get that one contract, right? And it's at, I have a 65% increase. So 65% increase is $130, right? So 100% increase would be $200 back that I've made. And that's what the break-even price is, right? Closely related to. Let me see if I can show you. Well, I'm in another one. Let's look at it real quick. I'm in, what am I in? I'm in XLF. Well, I'm in XLF. As you guys can see, the total return is 113%. So I've made more than what I put in, right? So that's what you want to look at, and to know where you want to. You want to know where you want to jump out. You want to know where you want to like sell the option. So for WWE, I'm selling it at only 100% increase, and then I'm out of there. Yeah, so that's primarily it. If you want to help you know how WWE is doing to see if it can actually reach that level, you can take a look at their earnings, right? So as you can see, even though this has been a tumultuous year for a lot of us, they've actually been beating their earnings, right? So this is the estimated earnings, right, that the analyst estimates, and they've been beating it each and every quarter. So they every stock has a quarterly report of their revenue and their earnings. And WWE has been beating their earnings every single quarter. Boom, boom. So if they continue that way, the stock price will go up. It will have to, like it has to. So, you know, well, it's a good indicator that it should. Maybe it doesn't have to, but it's a good indicator. And the revenue as well has also been increasing from year to year. We can actually go into quarterly and see. Well, quarterly though, the revenue has been decreasing. So that could pose a problem. And that's why I'm only doing 100% return for WWE. See, guys? That's how we do it, right? Simple and smooth, right? To do a call option saying that you think it's gonna get to this price by a certain expiration date. So please, I know, oh, doesn't it take me 8 months to make $200? Okay. It's gonna take me 7 months. Bro, come on. Don't be that type of person. It didn't take me months to make 130. I'm just saying I'm giving myself that time so the volatility doesn't hit me as hard as people who are doing options for 1 week or for a month. Like, what? That's how you lose money. Trust me. Right now I can sell this option. I'll make $130. Easy. So, you know, and also it's about the money you have. Like, imagine if I would have bought like 5 shares, right? 5 shares. I would be that's 2,468. That's $1,000, right? That's $1,000 that I put in. And let's see. That's 130 that I'm making times 5. I made 650. So that's I'm taking back 1,650 off of what? Off of how long have I had this contract for? How long have I had this for? When did I get you? When did I get you? November 27th. So what is that, like a couple of days? You know what I'm saying? So that's what I'm trying to tell you guys, right? It's good to do your research. Well, we can take a look at, let's see Neo, right? Let's take a look at Neo, right? Neo, see, $42, right? That right there is the strike price, right? People are doing options for Neo, and those people who did options for Neo, they're making some money for sure. Because if they go by this, if they go by the analysts, right, which I've already told you guys, if they would have saw it a couple months back, looked and checked, oh, what is the analyst saying? Oh, the target price is $35. Okay, maybe I go to do trade options and be like, okay, well then maybe by like January or this too close, or April 2021, I could say, okay, maybe it'll get to, well, you know, $43, right? Because it's all this is underneath. It's already past that. So, but and yeah, I wouldn't do this. This is I like to do out of the money options. These out of the money means that it's above the strike price, and the money means that it's below this. I mean, not the strike price, below the actual price of the stock. So I like to do above the actual price of the stock, just because I can earn more. So, and as you can see, these are down percentage wise anyway. So it's like whatever. And sort of these two, but I would do like, okay, at that time, because now it's too late. It's already above it. I would do like, okay, well, it can probably get to, for like $40 or something, and get this right here by, and it'll cost me $1,145 though. Watch if I do continue, so you guys know, 1,145. It can get expensive, I'm telling you, but you can make a lot of money. So I'm pretty sure in the past, well, this was a lot cheaper. So as you can see, it's a good way to do what you're doing. A lot of people who probably checked that out months ago saw the target price, the target estimate are up considerably. Like a $5 change in options is a lot of money, considerably. Yeah. So yeah, that's a fact. A $5 change is considerably a lot of money in options, right? Depending on your expiration date. So I'm not trying to have this video too long-winded, and I hope that you guys understood and see the power of this and see like why I tell you guys to be invested and do long-term investing and just take it at your own pace, at your own time. You're not in a competition with nobody. This is a skill that you should have or you should know about. I'm telling you, it's like, it takes time, bro. We're not doing this. I'm not doing this for money. I'm doing this for the experience. I'm doing this for the success. I'm doing this for the knowledge, that I can take my money and put into something and make some more money. I'm doing this for my savings, like it's not all about the money, so I hope you guys understood this video and saw like what you can do in this world, man. It's crazy, right? And yeah, pretty much if you have any questions or anything, just feel free to ask me. I'm always accessible unless I'm working. Then I'm not accessible. But other than that, don't forget to get the merch. Tommy Works. All right, guys. All right, so peace out.